Good afternoon and welcome to our Financial Advisor Forum. I'm Greg Greenberg from The Street. Stem cells have long been trumpeted as the next big thing, but those stocks have underperformed in an otherwise big year for biotech. Dr. Robin Smith is the CEO of Neostem. That company made a big move to the NASDAQ this summer. She's here to talk about the promise of stem cells and what we can expect from Neostem in the coming year. Welcome, Robin.
Thank you for having me.
Tell me, why have stem cell stocks lagged the biotech sector over the course of this year? Because biotech's really been running wild.
It has. I think investors need to see there's a regulatory pathway toward approval, and that when companies get their products approved, there'll be a way to get them into the market. So we've had some disappointments with Dendreon and some other stocks, and now people need to see the positive case samples.
Are we past the whole controversy debate over adult versus embryonic stem cells? You guys are in the adult stem cell business, so
Yeah.
it never really affected you as much, but it really dragged down the whole sector for a while.
Yeah, I think it's all about promise of therapies for chronic unmet medical needs, and I think people now are very focused on data, seeing what these therapeutics can do for the diseases that they're being targeted.
And you're also in the storage business, the cell storage business, and the cell manufacturing business. Can you grow those in 2014?
Yeah, I think the contract manufacturing business will continue to grow as the whole sector emerges, and it's our hope that as our clients become approved, they'll choose us for their commercial manufacturing, which would be a real win-win for us on the manufacturing side.
The other big thing people are watching for from Neostem in 2014 is your treatment for heart problems. This is a stem cell treatment for heart problems. What's the timeline on that?
Right, so we're developing a therapy that after a person has an acute heart attack to prevent worsening of that heart muscle function, because 1 in 5 people will die within a year after they've had a heart attack. So we are really pleased to say that we're on track to complete enrollment in our phase 2 PRESERVE trial this year, and then we'll have data readout 6 to 8 months after.
All right, now, biotech stocks generally trade on phases, phase 1, phase 2, phase 3, as opposed to quarterly earnings. You lost $9 million in the third quarter. I think it was about $27 million year to date through the third quarter. When does profitability come?
Well, certainly when we get our therapies into the clinic, hopefully in 2017, give or take a year, we'll start seeing the development of our internal pipeline become commercial. But also as our contract manufacturing business continues to grow and throw off cash flow, that should help decrease our cash that we need for our internal development.
And what is your burn rate? Speaking of cash, you raised probably 40 or so million in October. So where's your cash now, and where's it going to be at the end of 2014? We're looking at 2014 already.
I know, it's amazing. So in November, we reported we had over $50 million in the bank, so we'll be able to get multiple of our therapeutics into the milestones to the next points at which will show their value in therapeutic development.
All right, thanks a lot, Dr. Smith.
Thank you for having
me.
me.
And thank you for watching the Street's Financial Advisor Forum. From New York, I'm Greg Greenberg.